Welcome back to Investing Markets and Money with the Armchair Trader. And this week we're talking about Japanese equities and more generally the Japanese economy. Joining us on the podcast today, we're very privileged to be talking to Masaki Taketsume, who is joining us from Schroders, and he is the portfolio manager for the Schroder Japan Trust. Welcome to the show, Masaki.
Hi, thank you for having me.
It's really good to be talking to somebody who's dealing much more closely with these markets than I am. I mean, certainly our team was very bullish about Japan over the last 12 months, and certainly Japanese markets have been rewarding investors. But I thought just to start off with, before we get into the nitty gritty, can you give us a quick overview of Schroder Japan and what it sets out to achieve from a investment perspective?
So, Schroder Japan Trust overall aims to outperform the Japanese equity market, and the basic approach is bottom-up stock selection. And as a result of the bottom-up stock selection, overall portfolio has some bias towards value and mid to small cap. So, our fund is characterized as performance driven by the alpha generation from the stock selection and some style bias towards the value and the mid to small cap. So that's an overview of the Schroder Japan Trust.
And when you say mid to small cap, I mean, how small do you go in terms of the market cap of the companies you can invest with?
We generally define the large cap as a top 100 stock, market capitalization stock, and the next 400 as a mid cap, and everything below that is a small cap. We don't have any limitation in the market cap perspective, but we are always mindful about the liquidity of the trading volume. So, so in other words, as long as the liquidity is okay enough for us, we have no limitation in how small we can go. Yeah.
So this is very much a stock picker's strategy, basically picking the names that you think will perform in the future.
Yes, it is definitely. Yeah.
And the Japanese economy was doing really well last year, partly thanks to the very cheap yen. I was in Japan in October. I couldn't believe how cheap it was, in fact. And I've been telling everyone they need to go and visit while it's still as cheap as it is. Do you think that's going to continue, or do you think we're going to see some changes in the yen and in Japanese interest rates?
Yeah. So in terms of the outlook on currency, which is always difficult one, but given the fact that we think that inflation is coming back in Japan, so that allows the Bank of Japan to continue to normalize the monetary policy, which means that they continue to raise their policy rate. So that suggests that we are seeing that narrowing difference in interest rate between Japan and mainly for the US. So that implies that there may be some more chance to see that appreciation of the yen compared to the further depreciation of the yen.
How do you think that will impact Japanese stocks if the yen becomes more expensive?
We believe that the sensitivity of the exchange rate movement on the Japanese equity market getting smaller and smaller simply because Japan now has their own specific tailwind for the economic growth as well as the Japanese equity market performance, which corporate governance improvement and as we talked, coming back to the inflationary environment. So with those two strong domestic forces, exchange rate impact should be getting smaller for the Japanese equity market, we believe.
Do you think inflation in Japan has been a problem for Japanese companies in the last 18 months?
Actually, in a case of the Japanese company, it gonna work as a tailwind rather than a headwind because we were in almost 3 decades of the deflation. Deflation means that the lack of the pricing power for the Japanese company in a domestic market. But under the inflationary environment, if your company has a pricing power, I mean, with a strong market share or a strong brand or strong business franchise, you can raise the price to further improve the profitability or accelerating the earnings growth. In that sense, inflation, especially in a modest level of the inflation we are seeing right now, is going to work actually tailwind for the Japanese company rather than a headwind.
And one of the big stories here in the last 3 months, in fact, everywhere, has been the tariffs policy. How's that impacting Japan?
Yes, so obviously tariff is a negative for the all the global economy, but in the case of the Japan, negative impact maybe not as significant as feared. So 3 point first, export actually is not a big part of the Japanese economy. So Japan is actually the one of the lowest dependence on the export for the economic growth among the major developed country. So that's the first thing. Secondly, in terms of the export destination from Japan, US only represent 20% of the export from Japan. So Japanese export is more well diversified. And the last but not least, most of the goods exporting from Japan to US is a highly valued added item like an industrial robot, which no US company is manufacturing. So in that sense, they can offset some of the negative impact from the tariff by raising the price. So highly value added item exporting to US from Japan, and the US is relatively small portion of the overall export from Japan, and the export itself is a relatively small portion of the total GDP in Japan. So in that sense, tariff obviously it's a negative, but maybe are not as negative as perceived. So that's our view.
A long time ago, I used to cover Japanese stocks when I was working at the Financial Times, and at that time there was a very strong impression that a lot of Japanese companies were not so interested in the interests of shareholders and fund managers. Foreign fund managers used to complain about this. But today, Japanese government is pushing forward governance reforms and trying to persuade companies to become more responsive to the interests of shareholders. How important do you think that is? And is that a good thing for investors now? Are you seeing the benefits?
Yes, definitely. So corporate governance improvement is the one of the most, if not the most important positive driver for the Japanese equity market. It's gonna structurally improve the return on equity as well as earnings outlook for the Japan. So as you correctly pointed out, Japanese company has been uh, underutilize their balance sheet through accumulating the cash on the balance sheet. But because of the trend of the corporate governance improvement, more and more Japanese company is seriously reviewing their balance sheet and better utilizing the balance sheet by releasing the excess cash to the shareholder and or making the investment to enhance their profitability or growth prospect. So in that sense, corporate governance improvement, which has started in almost 10 years ago, uh, is working as a structural tailwind for the Japanese equity market, we believe.
And do you think Japanese companies are you seeing actual realistic changes being made by companies? Are they becoming more responsive to you?
Yes, it is. So I am doing Japanese equity fund management, so more than more than 2 decades. But he used to be governance improvement or shareholder remuneration. Uh, wasn't that any topic from the meeting with the management. But for the last 5 or 10 years, uh, we are more we talked about how you're going to improve the ROE or how you're going to better utilize the capital from the shareholder to improve the growth prospect or return on equity. So that's more and more topic of the discussion we have with the corporate management. And just for your information, for the last 10 years, actually average return on equity of the Japanese corporation got more than doubled from 4 to 5% to now close to the 10%. So that was partly driven by the corporate governance improvement.
Wow, that's excellent. I mean, that shows you what can be achieved. When I'm looking at the Japanese market myself, I see many very great opportunities in the market. One, because it's so large, it's so diverse, but it seems that there are many companies that are very under researched. They have very little publicly available information, or the brokers aren't really following them. Does this create opportunities for you as a fund manager?
Yes, it does. So as you pointed out, Japan Japanese equity market, more than 3,000 company being listed, and we have a very long tail of the mid to small cap investment opportunity, where the sell side coverage is quite almost nothing. So by having the in-house resources based in Tokyo, like our fund, we have a plenty of the opportunity to find out the mid to small cap company, which actually has a very strong niche top franchise in the global market. Yeah,
So you end up doing a lot of your own research rather than relying on any kind of third party information.
exactly. So that's one of the advantage by having the local research resources based in Tokyo, like us.
And at the moment, which sectors in the Japanese equity market look good to you right now?
Yeah, so we are a stock picker. Our approach is a bottom-up stock selection. So we don't necessarily take a top-down view to bet on any sector, but based on our input from our analysts as well as economic condition. So basically, we have a more positive view on domestic economic outlook compared to the global economy. We tend to favor the domestic oriented sector like services or retail or financial over the exporter right now.
Why do you think active fund management is still important to get the best out of Japanese equities these days?
Yeah. So even though we have a strong structural tailwind for the Japanese equity market, one is corporate governance improvement, another one is inflation. We have to pick the right one, right company to benefit from that trend. So, for example, in the case of the inflation, so it means two things. First one is a increase in the cost pressure. So that's going to happen in any company have a business in Japan. That's a negative side. But on a positive side, if you have a strong business franchise, high market share, or high brand recognition, you can raise the price more than your cost. So you have to pick the company which has a pricing power backed by the brand or market share to get benefit from the inflation in Japan. Here is an area that the stock picking becomes critically important. So that's one of the illustration why individual stock picking is so important to generate a strong outperformance in Japanese equity market. Yeah.
In terms of shareholder activism in Japan, we're seeing some fund managers launching activist campaigns. So a lot of these are not Japanese fund managers, but given that there is pressure from the government as well for these corporate governance reforms that we've already spoken about, do you think that this kind of activism is going to become more widespread in the Japanese market? And also, is there more of a Japanese way to get these sort of results rather than the sort of traditional Western way of doing it?
Yes, for both questions. So we do think that activist campaign gonna increase going forward, simply because that's request from the activist getting more rational or getting more closer to the that of the ordinary investor like us, or more similar to the what the current Japanese company management is thinking of. So it used to be activist campaign is more like a confrontation against Japanese corporate management, but now it's more like a cooperation among the activist, investor, and the Japanese company's management. So in that sense, we have a we we have a good chance to see that's a positive result which satisfies everyone, ranging from the activist, investor, and the Japanese corporate management itself. So that's a kind of the trend we are seeing a Japanese activist viewpoint. And just for your information, we are not doing the public campaign type of thing, but we are doing so-called soft engagement with a company we are investing in.
And when I'm doing my own research in the Japanese small and mid cap market, as well as some of the bigger companies, often we come across companies that are very diversified, but frequently they own different businesses and sub businesses that have nothing to do with the core business. So, for example, we were looking at a Japanese hotel group that was also had a construction arm, and then they had a manga studio making cartoons as well. So, from a fund manager's perspective, do you see many of these strange alignments of different businesses under the same corporate structure? And is that a uniquely Japanese thing?
Okay, so in terms of the diversified company in Japan, we tend to categorize them into the two types of the growth, two types of the group. First one is yeah, that kind of the diversified company you just mentioned, lots of business, no synergy. So in that type of the company, so because of the corporate governance improvement, we are going to see the more of the deconsolidation of that diversified company, spun out of the non-core business or those type of things. Another type of the diversified company, so it's some company has their same route for the diversified business, which tends to find in a chemical or electronics company. So they have a one core key technology, uh, which tends to be the origin for their company, and they are expanding the end market by leveraging its their core technology or core product. So maybe one of the example is a Nidec. Uh, so their origin is a motor. So they have a exposure to the various business in car, automotive, or IT product, or industrial machinery, but all of those business are related to the motor, which they have a origin. So there is a, that type of the seemingly diversified company in Japan, but it's actually the one basic root of the businesses. On that type of the company, they can maintain the, as long as they can maintain the core essential part of the root of the businesses, we are generally think okay to see the diversification because there is a strong synergy by leveraging their core technology. Yeah.
Understood. No, that's very interesting. And finally, I just wanted to end by asking you what your outlook is for the Japanese equity market for the next 6 months, really through to the end of the year.
Yeah. So towards the end of the year, obviously looking to the domestic side of the Japanese equity market, inflation and corporate governance improvement continue to progressing well, so that's supporting the share price performance of the Japanese equity market. But looking externally, what's happening in global economy, especially for the US, there's a lot of the uncertainty. So on that sense, there could be tug of war between the positive domestic force and the uncertainty from the external forces. But overall, considering the current valuation level, which remain within a historical range, and still the discount against a major equity market, Europe or US, we have a generally positive view on the Japanese equity market outlook.
Oh, very good. Well, thank you very much indeed for joining us this afternoon and giving us some very valuable insights into the Japanese market, Masaki. We really appreciate it.
Thank you.
You've been listening to the Armchair Trader podcast. Make sure you visit our website, www.thearmchairtrader.com, for your daily dose of financial markets news and sign up to our free newsletter there.